everyone's looking for the confirmation of Bitcoin, and then everybody's going to get out the risk curve. Everyone confuses inflation and debasement.
Yep, exactly.
Inflation is CPI, which is the rise of goods and services. That is nothing to do with, and this whole monetary inflation, if they just stop conflating the two things into one, they said there's inflation, which is usually a cyclical phenomena, and then you've got an occasionally structural because of, let's say, population or whatever, and then you've got debasement, which is a whole different game, and that's been going on.
The global financial system is undergoing a dramatic transformation, driven by shifting liquidity cycles, the rapid rise of cryptocurrencies, and increasing wealth disparities. As central banks continue injecting liquidity to manage debt and stimulate growth, a parallel revolution is taking place in the digital asset space. Bitcoin, Ethereum, and other cryptocurrencies are poised to redefine perceptions of wealth and investment strategies. In a recent interview, Raoul delves into these critical shifts, offering a sharp analysis of how liquidity cycles intersect with the evolving cryptocurrency market. He emphasizes that, despite economic uncertainties, liquidity injections remain crucial for sustaining growth and managing debt, with these cycles likely to have a significant impact on crypto prices. As digital assets gain prominence, the effects of liquidity shifts on Bitcoin and other cryptocurrencies could drive substantial price volatility, creating both risks and opportunities for investors. Raoul takes a strategic, performance-focused approach to crypto investments. While he recognizes Ethereum's importance and has invested heavily in high-end NFTs, he suggests platforms like Solana and Sway might offer better near-term growth prospects, potentially influencing the valuation and trajectory of established coins like Bitcoin. His analysis underscores that digital assets are no longer mere speculative ventures but integral components of wealth strategies shaping future crypto market trends. To hear more of Raoul insights on what could drive the next major move in crypto prices. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
It's if the liquidity picture doesn't match what we're all expecting. You know, the general thesis that I brought about was the fact that we need to refi the debts, and that liquidity has been cyclical and has been measurable, and we've got a huge amount of debt coming. Yes, GDP growth is decent right now, so that does pay for a lot of those interest payments, but interest payments are very high. Not only the US doesn't provide liquidity, because if you go back to the 16-17 bull run, the US had raised rates once, went on pause, didn't do anything with liquidity. The Chinese did it all, and then the UK because of Brexit. And so it'd have to be all of them not doing anything. But the Chinese have already made it clear they're going to have to do something. That's the difficulty I see is I don't see how nobody's going to do it. Because inflation's imploding in Europe right now. It's just the Europeans are going to keep going. I don't know. That's the only thing I can see is for some reason that whole liquidity story, the cyclicality doesn't work. But it's been working perfectly since the bottom in 2022. And really, when I look at the patterns and stuff with GMI, it's like I'm complaining because it didn't match last week versus, you know, really with a bit of wiggling around because of flows or whatever, whether it breaks out this week or in 2 weeks' time, 3 weeks' time, makes no difference. But it should be that order of magnitude in terms of time. It's like, it's right here, right now. Everyone's looking for the confirmation of Bitcoin, and then everybody's going to get out the risk curve. I love ETH. It's great. My only ETH exposure is NFTs. So I've got a lot of high-end NFTs, which are only on ETH. Other than that, I'm a mercenary otherwise. It's like, you know, what's going to outperform? I've been Solana, and then I've been switching towards Sui, even though I'm on the foundation. So I've been granted tokens, but I've actually been buying in the open market because the chart versus every cross rate versus Bitcoin, Ethereum, Solana, and choose your token, and it's about performing. So I'm like, okay, this is the signal that this may be the next chosen one. ETH, I've been thinking through what happened with ETH. The layer 2s obviously took away from the layer 1. Okay, fine. But what I'm thinking is really being built is something that scales much larger by having the layer 2s, and then they're going to go to this ZK roll-ups, whatever it's going to be. But they have a roadmap. And I think basically they've overbuilt infrastructure for where we are right now. And that's what it is. While Solana and Sui and other stuff are seeing the pickup in activity, ETH has basically built out enormous amount of block space. And as the market grows, I think, ETH, because it's security and all of the other stuff, will attract more flows. But it's probably going to underperform this cycle. Underperforms Solana, but I still think it outperforms Bitcoin. I look at that cross a lot. That cross perfectly works with the ISM. So as the business cycle picks up, that's alt season. Now, why is that? It's pretty simple, because everyone has a bit more money.
Yeah.
Because as soon as the ISM picks up, still below 40, below 50. So it actually says a big part of the economy is still slow and another part is racing ahead. So that means that corporate earnings are still slow. That means people's paychecks are slow. That means the bloke who owns the sandwich shop down the road, earnings are still a bit slow, all of that stuff. When it starts picking up, that compounding effect of the business cycle means more disposable income, means more investing, and then people go out the risk curve. So we still haven't got to that point. So we're still, and that's another reason maybe this whole breakout from the banana zone hasn't happened, is it really happens when the RSM crosses 50 to the upside. That's like a big signal.
Raoul Pal's approach to cryptocurrency investments is both strategic and forward-looking, with a focus on assets that show potential for outperformance. While he acknowledges Ethereum's strengths, particularly through his involvement in high-end NFTs, he adopts a more opportunistic stance, predicting that Ethereum could underperform compared to platforms like Solana in this cycle, but may still outperform Bitcoin due to its strong security and evolving development roadmap. Pal also sheds light on emerging trends in the crypto space, such as the potential of gaming platforms on the Avalanche blockchain to drive broader adoption. Beyond conventional factors, he highlights more unconventional catalysts, like the role of meme coins, as possible drivers of future market momentum. Let's return to the interview and watch more clips to gain deeper insights from Raoul Pal's discussion.
Everyone confuses inflation and debasement.
Yep, exactly.
Inflation is CPI, which is the rise of goods and services. That is nothing to do with, and this whole monetary inflation, if they just stop conflating the two things into one, they said there's inflation, which is usually a cyclical phenomena, and then you've got an occasionally structural because of, let's say, population or whatever, and then you've got debasement, which is a whole different game, and that's been going on. It's equally dystopian in terms of what it does to people, but they don't see it.
Well, the wealthy get wealthier and the poor are getting screwed.
Yeah, and what it means is, what is an asset? An asset is future deferred consumption. It's something you buy today. You get rewarded for locking up your capital by excess returns for the future, and for that you can spend it in the future. Now, what's happening is our future selves are getting poorer because you can afford less. The investment banker, 25-year-old investment banker now can buy a fraction. Well, he can't even buy the house because you can't even get the mortgage on it anymore. So then you're missing out on that whole rung. And if you look at the stats of home ownership of 30-year-olds, it's collapsed if you compared it to 1983. All of the stats just show that they're just going to miss out on a big part of economic life, which is why so many people are driven towards speculative assets, because it's the only way of making it up. When you speak to somebody, I had this conversation today or yesterday, I'm like, why don't you invest in the S&P 500? They're like, how much does it make a year? 8%. They're like, I'm never going to make enough money to retire or do anything. So therefore, they move to Bitcoin. Now what's happening, it's really interesting. Go and speak to a 33-year-old now and say, so, I presume you're long Bitcoin for the crypto cycle. They're like, that. 4x? Never going to make me enough money. I need to make 50x. I'm not joking.
Yeah.
That's the other thing about Bitcoin is people don't really, we all get so in the day-to-day stuff. Really, what we've created is a globally homogenous asset, right? You're in FX markets. We think of like FX as globally homogenous. It's not. Go to a rice worker in the Philippines. They have no chance of buying dollars or pounds or anything.
Yeah.
So it's not a product. Gold, yes, but the bid offer spreads are so massive. So this is the only one, and it's fractionalizable. So whatever you earn, you can put 10% of your income in. It's also some random things like should keep your eye on stuff like Off the Grid, the new big game that's coming. It's on Avalanche. Okay, fine. Avalanche is not a chain that a lot of people use, but this game could be huge. That's a huge influx of people that we're not even looking at. And there's a bunch of the protocols who are building stuff like that. So it's like a mass market, abstracted away use of crypto that drives on-chain adoption, underlying value. So I think that that's the other thing. It's not the obvious, it will come into the Bitcoin ETF and then flow through the market. It could come from a number of different places we're not seeing. Don't forget, at the moment the business cycle picks up a bit faster, it's slow across Europe, it's slow in the US. The forward-looking indicators are showing it going up. I mean, that probably ignites meme coins and brings a whole bunch of normies into meme coin casino, because it's just gamification of attention and
Community.
internet memes. I mean, they get it. And if their mates we've seen it before in every cycle, whether it's ICOs, if your mate is making a 50x, you are damn well opening an account and going to start trading because you can't bear it.
In a surprising twist that challenges the usual optimism, Bitcoin's recent drop below $60,000 has unsettled the crypto landscape, resulting in the liquidation of $150 million in long positions across digital assets. Historically, October has been a month where Bitcoin thrives, earning its nickname Oktoberfest. However, Bitcoin is currently leading the liquidation tally with $63.2 million in losses. The broader context, as Raoul has frequently noted, relates to liquidity cycles and macroeconomic factors. Geopolitical tensions in the Middle East and a weaker-than-expected US CPI report have heightened uncertainty. Additionally, the SEC's lawsuit against trading firm Cumberland has introduced a regulatory twist that is shaking investor confidence. The latest US jobs data, which reduced the likelihood of a Federal Reserve rate cut, has further tipped the scales in favor of traditional safe haven assets like gold, causing riskier assets such as Bitcoin to lose their appeal. This shift, occurring amid broader macro pressures, has contributed to Bitcoin's 8% decline over the past 2 weeks. As we wrap up, what are your thoughts on the current market trends in cryptocurrency? Do you believe Bitcoin and Ethereum will continue to be central to global wealth strategies? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.